that is basically, first of all, is the standard the standard TG capital for our AMD model. Ignore this; it looks like it is a win, but yeah, I haven't like actually reviewed it properly whether it is. I'm pretty sure it is, but like I said, need to review it. But basically, what clarified criteria V2 is first of all I'll tell you the evolution of how it went. So basically, how it started was I would right, you know what? I'll just delete it, and then we'll do it properly. Okay. So how it started was with bull trade indicator. Basically, what you would do is you would, now this is just for the history behind this method. I'm not going to use this anymore, but and see it's not even valid with this one is, but anyway. So basically what I would do is simply your EMAs must be stacking. As you can see, they are your 200, your 100, your 50, your your 15, your 13, your 9, and your 5. Now, they must be stacking, right? Then, basically, you must have your GAN box tool marked on this, which I would just mark any bar, any first bar, and I'd basically mark the most sensical point, like this most sensical level, like on the bar itself, to utilize to see in a bear case it open above. So for example, what I mean by this, which like I said too, it's kind of irrelevant even saying this because I'm not utilizing this anymore, and like I'll timestamp this video I think too, so like how it began basically, if you want to know. So what I would do is I'd mark up this, right? Obviously this is just complete theory. Let's just say this is the first bar and it's all valid, whatever. And then so it's obviously going to open above the 0.75, right? And then it's like obviously probably going to also open up above the 0.3. So I would settle on the 0.3 because that's the most appropriate point to look for it to open above. Then and then yeah, I just would need to have a bearish close and for it to be red. Then anyway, clarified criteria came around, and basically what that consisted of is you needed an opposing bar in your case, so your EMA stacking. It's all valid. You need an opposing bar to the direction you're looking at trade, and then for the 0.7, 0.75 region to be marked up, and then see it open above, and then get a bar close. And then, well, actually, it's kind of like clarified criteria and then clarified criteria V1, because then what I learned is, yes, you need an opposing close, but then you're also, this bar, being your bar you're looking for to close, in a bearish case, mustn't close beneath prior bar low. So, if this bar was bullish and you wouldn't be looking at it, and whatever, then the next bar, it mustn't close beneath prior bar's low, right? And then you get in. And then anyway, I learned that the bull trend indicator is a load of shit, and that some bars, right, like you would actually need to get in, but like, so like for example, if I just put it back on, you can see in after the fact case, scrolling back and shit, I wouldn't have marked this. So it's literally shit, right? It's a complete lagging indicator. Real time, if you get it closing nice and stuff, and you get the bull trading indicator paired up with all the other stuff I've added to this method, then it's nice to see. It's just like an additional confluence, but you definitely don't need it whatsoever. Like I said, I don't even have it on my chart anymore, or rather, I should say, as you can see, I don't even have it on my chart anymore. Now, what clarified criteria V2 is you simply need everything, so EMA stacking, right? And your opposing bar close, mark the range, see it open above in a bear case, and then you get the bearish close, and it must close above prior bar low, the same, but you need a nice wick. And I've kind of always utilized a concept with my standard strategy called proportionate wick rejection. So for example, like this, right? Look at this wick compared to the body, and then compare to the opposing wick. In a bear case, let's find like a kind of bad close. If this were to be the bar that you're looking at. Wait, actually, so for the 15 I don't even think it opens above, to be fair, but yeah. I was gonna say for the 15 p.m. time slot, UK time. So yeah, a bar like this wouldn't be sufficient because you've got too much of an opposing wick. It's not a nice wick that you've got under your circumstances. It's just not valid. So yeah, you need like a nice wick, right? Then I kind of made that into, well, you need a nice wick bar close, right? So basically a sufficient anatomic bar close. But sometimes you might not get a sufficient anatomic bar close, but you've got enough sufficient wick, like for example this would be fine if it was obviously this bar. So yeah. Well, it might have been fine, it depends, right? But like, probably it would have. I don't know if I've got an example I can quickly show you, to be honest, because these are like the first couple of trades on gold, but it'll just go. We'll have a look, and then, but obviously, and then I'll show it, say the criteria. So like, there's good, but obviously EMA's on stacking. Like a bar like this, I've seen quite a few, and like possible. Well, in the past, if I didn't know about this wick rejections, and then seeing like it needs to be a nice proportionate wick reject, I would have marked, but no, so this wouldn't be valid. For example, you get the gist. Now I'm gonna write this criteria for you. So EMA stacking, same as usual. Opposing bar close to the direction you want to trade it in. Next bar opens above 0.7, 0.75 off this range. So it should say 0.75. Okay, so you probably, for example, sometimes you want to see the open at the 0.75 or specifically at the 0.7. It does vary on occasion to occasion. So like for example, in this occasion, if the 0.7 was up here, that would, if it opened in the middle, that would be alright. But some occasions that might not be okay, right? So like for example here, if it opened at the 7, you'd probably be like, well, you probably need the 0.75. It's just based on experience, right? Now, after you've got this, so you've got your EMA stacking, you've got next bar up, opposing bar, then you mark the range of that, then you see it open above. Next bar must close bearish and beneath prior bar low in bearish case. Vice versa. Next, you must have playable range, which is relative to what past most recent playable ranges at hand have been unfolded. So what that is this, right? So this is range, this is range, this is range. If for example, you've got like this, like that's shit. That's not a replayable range, right? Now, So let's just think. So you may stack and oppose more close. Right, there we go. So that's the criteria. Is there something else? I don't think so. Now, for stop loss placement, we can just do it on this one. So you would obviously be entering here. Now, originally, like literally before today, I was deciding upon using a 1.4, placing your stop like this, right? Now, what I had been thinking was like, so obviously it doesn't go 1 to 4 in this case, but like I had been thinking kind of spitting some proper logic today, which I actually managed to record, that like, you know, this system is actually really good because you can't be a beginner really with it, right? Like, you know, because sometimes you're going to get like trades where like, you know, you mark up like how Tyler does it, you know, well, how I would look to basically do it is just he just usually play. He said he just plays the stop there, but me, I found that it's maybe good to just give it a little tiny bit breathing room. And anyway, you can see here you probably got a 1 to 4, but sometimes it goes even bigger, you know, and you know, so beginners will be naturally tied to like, you know, oh well, I'm going to use a 1 to 7, I'm going to use a 1 to 5, and then they'll probably get smoked and then start using 1 to 2s. But I've never found that 1 to 2s are actually good. Now here is how I would rather want a 1.5. Now this is because, right, 1 to 2s, it's like just getting into that. It's like this entry level supercar, right? It's like, you know, I don't even know, I think a Porsche 911 is a supercar, to be honest. I don't know, but like, how can I say? It's like, you know, it's right on the entry level to get into high risk to reward, right? So you are still playing with sometimes losing streaks and shitty trades where, you know, you just don't, where it's like it goes close but not enough. Whereas a 1 to 1.5, right, it's with this criteria, I think with many criterias, it's a mint risk to reward to have, because, you know, if it's a super high probability criteria, well, you are still going to take some losses, right? So it's going to keep you ahead, first of all, because look at this, right? I was saying it way better in the videos that I'm going to upload after I've made this video, right? But, so if, right, I think this strategy at its minimum is going to have about a 75% win rate, right? It's probably going to be more though, but let's just say it's a 75, right? So therefore, over 100 trades, let's say you take 78 and they're winners, right? So 78, and then we'll do a realistic example for like a month or something, because obviously you're going to be utilizing multiple instruments. I mean, for example, I'm pretty sure this year there's only been no trades, but we'll find out obviously. But I'm not going to show that on here, because I'm just showing you how I place my stop loss, right? But anyway, 78, let's just say you're on a 50k account, and so you make, well, with 2% risk, you make 1.5k, so if you're risking $500 and you make, it's $750, right? So, and then you make 750, right? That's like a lot of money, right? Even on a 50k, and then you take away, so 58.5, and then you lose. Jesus, that was hard to say. And then you lose. I had something else in my head. 78, 22. So 22 times 500, and then take this away from 58, 500. That's like a serious profit, right? So that's your profit, 47k, right? 47.5k. So like, let's just say, right, on a trade by trade basis, it goes something like this, right? Let's just say you start off with 3 losers. I was gonna say 2. So you take, or should I just say, minus 500, well, let's just say minus 500 equals. And then you take two winners. So you've made 7, 14, you've made 1,500. So you've just made what you've lost back, I've just realised. In 2 trades, right, which is definitely achievable. And then you make 1 win, right, you're up. Well, it should have been 750, but you get the gist, right? I didn't even need a calculator. So yeah, anyway, this is how you place your stop, right? So on the bar that you're entering on, which is obviously here, but like this is the bar you're basing your entry off, so you can just mark your tool here, or you can mark it from the real-time open of the next bar. Probably be a bit better. And then what you do is you mark the higher hand, which is obviously here, and then you go just a bit above, like that. And then from this point, this is a really high probable setup, right? This within itself, but this isn't what you utilize, and you then mark the higher hand again, right? And then you look to the left, and then you see what zones are to the left, and which zone makes the most sense, or which part of the zone makes the most sense to cover. Now, in my case, it would be 50% of this bar, right? Because I think it's a little bit, but you have to like acknowledge the circumstances that you're operating under. Even this, that's high probable, right? There, but in my case, you want to give it a bit of room. I think also the reason why I'm utilizing a 1 to 1.5, which I also mentioned in the videos that I've made today, which I'm pretty sure it did go. Yeah, nice. The reason why I'm utilizing a 1 to 1.5 is for mainly mental purposes, because I don't think like a 1 to 4, bear in mind, would be fine with this strategy, but like you're utilizing multiple pairs. I've done this in the past, and I've found that like it hasn't worked for me. Utilizing like multiple pairs, it's just a recipe for disaster mentally for me. The system might work, but I can't execute it, right? I just can't. I'll end up, like, you might be thinking, well, how can you not? Well, if the stop loss is meant to be here, I might place it like there, and I just can't operate flawlessly. I can't see things straight. But like, with a 1 to 1.5, it's not really something to get all giddy about, right? I mean, realistically, you could probably just put your stop just a bit above this FEG, right? Because of the circumstances you're operating under. So it'd be something like this, right? Just a bit above that FEG, and you would be fine. I mean, like, you're still. This is also in a time period where I would have available. So like, if I see, what date is this? This is the 6th of October 2023. So I'm pretty sure we'll be able to get there. 6th of October 2023. Like if I'm utilizing 1 to 2, I might. It's not that much, but for some reason I just can't like I don't know. I can't see straight. It's a bit weird. But like anyway, if I see this, it's coming in, it's kind of edging slower, and it's just grinding lower. As soon as it gets around here, I'm out. Right? Sometimes it's gonna like just go about here, and then you're gonna get filled and probably get some positive slippage. But yeah, so I think I explained this a lot better in the video that I made today. But like, look here, right? If you utilize, right? Yeah, it's this too. It's like, you don't want to have your stop just a bit above this high and then go for a 1 or 2, because you're absolutely cheating yourself on at least another 2 arc on a consistent basis. Obviously, that isn't the case here, but you can see I think long term, right? And that's why I've made the conscious decision of 1 to 1.5, right? And as well, it's as like I also talked about, like, if you've got a car, right, and every time that you buy this car, right, you've got the capital there. Let's just say you got, I don't know, this isn't the case for me. My parents are still here, but let's just say you've been left with some money from your parents that have passed away sadly. Bit of a weird example, this, but you are left with £150,000 after tax. It's tax free. Now, you get offered this car by this dealership, right? And you're speaking with them. You might have met them in a bar. Don't drink, for example. So this is a completely really strange example. but you met him in a bar and you get talking with him, and then he's like, yeah, you know what, I like this guy. And anyway, he says that in his family business in a car dealership, he gets given these cars, right? And out of every 7 that he's given on a statistical basis, and this is factual too, it's not like what you've probably experienced with strategies in the past where you found that on paper it's like every 7 you're going to get wins, and then in reality you only get about 3. And that is probably based on a mental factor, right? And that's why I'm utilising this too, because that does actually happen. Anyway, it's real. Every 7 you get, even you get the same amount that you invested in that car back. So you invest 50k, and out of every 7, out of 10 lots of every 10 that come in, so 10 lots, right? 10 bunches of these cars, that's even 7 out of those 10 bunches, you get 7 out of 10 of individual bunch that you actually make. You make what you invested on top of what you invested. So you get 50, so you invest 50k, and then you get your 50k back, and you get an extra 50k, right? So you put 50k in the line, right? That's like you're risking $1,000, and then you make $1,000. You make 50k out of every 7. You are left with what is it? 75, so 35, so 350k. Take away the amount you lost, because obviously out of some of them, you know, you invest and then you lose it all, right? No one buys, and you have to just keep it, or whatever you do. I don't know, right? Just an example. And you lose 150k, so therefore you are then down 100, so then you're 200. And then you're down another 50, so you're up £200,000. Right now, out of one lot of cars that you receive, out of the next 10, so you got 9 more coming, and out of those 10 lots, 7 of those lots are going to be consistent of the 7 out of 10 where you invest 50 and you get 50 back. Right, so you get what you invest back and your 50. I'm really sorry if you're not following, but I am following. So you were then up 200,000 from your 100, which you had 150 in the bank, and then you just invested 50 of that 150, right? And you just made an extra 200k. So now you're up 350,000, right? In a more simpler term, right, if you just fucking risk, right, which is more realistic, in my case, in a 50k account, if let's just say you're risking 1%, right, you'll make 3,500, and then you'll lose, I keep mixing lose and utilize, you'll lose 1,500, so you're up 1,500, I'm pretty sure, 5, 10, 15, yeah, so you're up 1,500. Like, if you start with, I don't know, a 50k account, right, and you're up 1,500 at the end, like, is that not good? You know, what's your aim? You know, if you can do that without any mental bother, why wouldn't you want to do it? It's like complete, like, craziness if you don't. Whereas, like, if, for example, you know, I would probably say, right, because I would actually probably say at the level that I'm at now, I could probably do all this with a 1-4, but I don't really want to. Let's just say, out of the next 10 trades, 6 of them were, to be fair, it's probably going to look more like 5, right? But some of the times it will actually be like, out of the next 10, you'll win all 10, probably. Seriously, too. I don't know, though. I found the least losses are on ES with this stop loss, with the proper stop loss method, which, like, you're doing that initially anyway, right? With it, where elsewhere with the method is at now, you open here, and then you'll mark up the higher hand and you go a bit above, and then you're looking at what that looks like, because that is the valid setup. But then what we are doing is we are giving ourselves some mental breathing room where we can focus on what the hell's actually going on, right? Now, yeah, we're not actually like directly interacting with, like, flowing with, like, how the market is set up and stuff. We're just like, we're going based off this criteria, but we can flawlessly execute this, right? So there's no, like, you've took 4 or 5 losses in a row and then you have to put the next one on. You might end up skewing the amount you put above, or you might, like, put it too much above. You might put it just a bit above, and then you're wicked out again. And it's like, oh man, I don't know about this. Like, I've been through that so many times. I would rather just make money. This is a valid set of criteria for sure, right? But I digress a bit. So you're like marking the high hand, and then you're seeing what that is, because that is the valid stop loss placement. And then you're looking to the left, and you're looking at what zone there is, and then it's here, and then you're just putting a bit above, just a little bit above, and then you're placing your stop there, and then you're just going for a hard fix 1 to 5, 1 to 1.5, which is what you would be doing with a 1 to 4 anyway. But yeah, it's way better. So the new things, like, is you need your AMA start again, you need an opposing bar, you need a nice bar close here that opens above the first opposing bars, 0.7 or 0.75, depends on the scenario at hand. Usually it is always both, but sometimes you can look for the 0.7 solely, or anyway. And then you're just seeing a nice bar close with a proportionate wick rejection, and then you're marking the high at hand, and you're putting it a bit above, and then you're looking to the left and basing your stop loss like that. And simple as. And then you're going for a 1 to 1.5 risk to reward. Now, I'm not doing this because it's better risk to reward. Factually, on paper, a 1 to 1.4, if not more, would be better. But I cannot stomach taking any more losses than what even a 1 to 4 would endure, let alone a 1 to 1.8 or 5 or something, right? Even a 1.5, I've noticed that is different. So even on ES, as you can see in some of the past videos that I've got, it looks a bit silly, going for a 1 to 1.5, but look, I don't give a shit. If you execute that and you get used to executing that so flawlessly, you're gonna make consistent money for sure, right? And that's all I really give a shit about. If you think about the big banker guys and stuff, and just kind of put yourself in their shoes. Not that I know anyone like that, but you can think, right? Would you be fucking happy with investing 20k to make 20k 7 out of 10 times? Yes, any day of the week. That's a 1 to 1 too. It's it doesn't seem realistic having in this world. It doesn't seem and I know how this is gonna sound, but look, I don't give a shit if it's I'm a bit closed-minded or whatever, right? And I personally don't think I am. I think I'm quite open-minded, but who knows? People might take this as being closed-minded, but if I'm still being closed-minded and I still make consistent money in this endeavor, and the possibility is there, but I couldn't do it anyway, mentally speaking, to make 1 to 4s and stuff on a consistent basis, then so be it. But it just makes logical sense in this world that risking what, you might put initial investment on a 40 grand car, depending on the car, can you really expect to make 8 times the amount? No, you're probably, if you're lucky, gonna make 0.7, 0.6 on top of your initial investment. So you get your initial investment is there in the sale of the car, but then you're also adding a 0.7 off that car. So for example, if you're selling a car for 43k some dealership, right, and you buy it for that, but it's a proper one, it's not some shit, and then you then put 0.65% of 43k. It's probably not that much. So you're only adding, yeah, okay, so you're probably not doing that. You're probably gonna add at least an extra 5-7 grand. So that's actually, that probably does equate to like a, well, actually no, because wait, hang on, I don't think that math is right. No, that's not right. That should be 27k. Yeah, that should be, so it's not 279. I don't know why I got that. I think I must have written that wrong, because a 1-to-1 would be, so one, but like what I'm talking about is like your 1% is your 43k. That's your risk down. You then get 0.65% of your 1-to-1 risk, right? So it's like it's a 1 to 0.65. So you've got 43k, but then you make that much, which would be about 27 grand 900. So add 27 9,500. So 27 950. That's probably what it is. So then yeah, like you're then making that. Like, are you not happy? Like, mate, you'd be on a yacht with that. Now, if you then think about this, right? You know, if you think about this, all these people on Twitter and stuff with like these, even the real guys with 1-to-2s and 1 to 2.5, sometimes it's like 1 to 1.6, you know, and that's a small, known as a small trade. I bet there's people out there in like places like Andorra and Switzerland and shit who have 1 to 0.6 risk to rewards, right? And they win probably like what? Like how much of the time would you have to win? Like let's just say so like you make 600 times 8, and then you lose 2k. No, oh well, hang on. So so a one. So if you're on a 60k account, no, sorry. If you're on this, actually, I'm operating completely out of my subconscious here. No point. A 1-R would be like, I think you would just do 60% of 500, so 300. Yeah, right. So you're losing a grand. We know that, because if you're on a 50k account, right? Of course, the big guys with yachts probably won't be utilizing 50ks unless they're utilizing many 50ks. Anyway, let's see if this is profitable. Times 8, and then you lose a grand. That is still major profit. And the big guys, it probably would be like, they're like, on a realistic note, their minimum losses, they would probably, like, on a worst case scenario, they've got an 80% win rate basically, right? So and that would be more so around the 83, 82 mark, and actually most of the time they're winning, right? I bet there's guys out there doing that, and it just makes sense. Like, you know, if, for example, I'm gonna have to let my cat out now. Joe. Yes, he's called Joe. I'll just let him out real quick. You know, like, for example, right? How can I say this? If you are, the only thing I can kind of think of is, which is a realistic example, is like people who sit on the Supreme website and they buy a t-shirt for 400 quid. Retail, standard. That's the initial price. Quite crazy, but that actually does happen, probably. In fact, sometimes it's probably less, right? If, you know, like in a really rare case scenario, they can get about 500 quid, right? 480 quid top or something. That's quite a risk to reward, but not usually. You'll be like, if you can get a top and you can get 80 quid back, on top of your 80 quid, so you get 160. Like, that's after all, like, that's actually what you get, you know, so out of the shipping fees, whatever. You're fucking happy, regardless. You've made 80 quid, you know, from thin air, basically. Literally, thin air. And then let's say you make another 80. Wow. Now, think about this. This is where, like, the human greed thing comes in. It's like, I want more. And then it's like, you know, you're kind of on a bit edgier with the 1 to 2, right? But, like, if, in my case, right, you get, what would it be? It would be 120 quid back, right? That's still fucking good. That's like a big risk to reward. Seriously, you know. So, like, and like, yo, like, if, right, most of the time, right, if you can get, you've got a positive risk to reward under some seriously high probable circumstances, right? You're up 4.2k. Yeah, I don't give a shit whether in future they run fucking 1 to 50. I was gonna say 1 to 15, let alone 5. Even 5, whatever. I will still be more than content with, I don't even know where I am. Oh my god, yeah. With my 1 to 1.5s. Let's see whether there's a, let's see whether there's an example. So, just in this little section. If not, I'm gonna just turn it off. Like, and it's not about maximizing profit or whatever with this. It's about making money. You know, it's like, yeah, okay, you know, if for example, in my case, right, if the 1 to 1.5 is capable of consistently making money with no problem, right, I'm gonna utilize it, especially with every decently high probable system. A 1 to 1.5, you cannot go wrong, because you're going to probably you're going to take losses. Not probably, you're going to. The 1 to 1.5 keeps you in the game, because it's literally it takes the brunt of the losses that come, because you're still going to be profitable, right? Like, you could even take, theoretically, right, worst case scenario with this criteria, you have like 5 losing trades and you got a 50% win rate, right? You make 750, right? So is it 750? Yeah. If you're risking 1%, times 5, I think you might. I don't know if you lose money here. And then you lose. Oh yeah, what the hell? You don't lose money. Shit. Because you would lose 5 times 5 is 25, so you'd be losing 2,500. You're up still. You're up 2.5%. What the hell? Like, a 1 to 1.5 is fucking goated. Like, seriously, it warrants saying that. I think there could be a setup here. Right. No, there's not. Because your blue line is on the outside. Oh, shit. Oh, no. Yeah, no. It'd be nice to see the next example on gold. Like, I haven't even backtested gold. I've backtested this year on XAU with the CFD, but not GC, and that's what I would be utilizing. Yeah, the reason why I've been mixing up my words when I've been seeing losing is because utilizing and losing is kind of similar, right? Anyway. This wouldn't have opened above the right amount, so, but also, yeah, also you You may sound starting. Fucking hell, that's awful. This bit, that's a recipe for disaster. Yeah, what I meant to do was 60% of, what was it? It was 43k. Yeah, so 25,800. So you invest 43k and make 2,500, right? Like consistently, right? So like you're putting down 43k, right? But you know, and it's probably even more certainty in the real world. Like I say real world as if trading isn't fucking real and shit, but you know what I mean. The hard truth, like you're on a screen here, right? Like the hard physical world, right? Howie, come on, honey, Howie. You know, it's probably even more certainty. So, like, let's just say that is the case, right? You know, you invest 43k and you make 25,800. Like most of the time, you're not complaining. You'll be sat on a fucking yacht somewhere. You know, like I just like that's a lot of money, and you can get to that point in this. You know, where like you know, but obviously then you also want to get to the you wouldn't you wouldn't like let's just say for this method, right, if you could easily get a 1 to 1.5, which with this you can, you wouldn't then go and use a 1 to that's unlucky. You wouldn't then go and use a 1 to 0.6, for example, you know, because 1 to 1.5 in the train game, you know, like maybe it's in the real world that might be fine, but like, and you could actually think about this in that way in the real world. But like with the trading game, you know, a 1 to 1.5 with a very high probable criteria. Let's just say a 1 to 0.6, for example, boost your win rate a little bit. But with a 1 to 0.5, right? Okay, this is a bit iffy because this might not. I don't think this is a playable range, to be honest. Like if this just sunk, you know, I would like that's not valid. So, but that definitely closed that open below. But in the trading game, a 1 to 1.5, you know, I mean, most of the time too, probably with this criteria, it would only boost your win rate by a few trades, right? And overall, it just wouldn't make sense, right? And also, it doesn't make sense anyway from the standpoint that this will keep you ahead because invariably you're going to take losses, right? Of course, in the real world too, you also will, but what was I going to say? And just from being in the training game, I know that you're not escaping taking losses. So, the 1 to 1.5 keeps you ahead. And when it's going good, it's going good. Let's just say that because, I mean, with this, like people think about 1 to 1.5 is small, but I think it's kind of big. I think it's fantastic. I wouldn't say it's big, but I would say it's on the big side. I mean, think about it logically. You can put down $1,000 if you've got 100k in your bank, right, or an account, and you're full of experience. You're fine to operate. You've got lots of data, and it's all the same. You can risk, let's just say, 3%. We know this isn't 3%. This is 1.5%. And you make, what is it? It's 150%. 150% of 1,500. 2.25k. And you make 2.2. Wait, no. Is it 225? 225. 6 times. 6 out of every 10 on average, right? So it's better. Times 225 times 6, and then take away 1.5 times 4, and then take away 6 grand. You'll be left with some major cash after that. Probably around 8.5 to more K. Because I really doubt you can have a 60% win rate with this. Seriously, too. And even if you did, even if you had a 50, you would still be okay. So, like, and that's with an initial investment of 1.5k, but over multiple times. You've literally, like, what even was the profit? It was like 7.7k, 7.5k, divided by 1,500. You have 5x your money, basically. Like, are you not happy with that? Like, I utilise a 1-to-1.5 anyway for my main system too, so yeah. But obviously this month we took an invalid trade to start the month. That sounds great, doesn't it? Yep, I know. Sometimes it goes like that. It's not, well, it shouldn't, because I shouldn't be making that silly error like I did. But mistakes happen, I guess. So we'll just wait for the EMAs to align, and when they misalign again, I'm gonna end this video and I'm gonna put my tea in because I'm fucking starving. We've got a jackfruit. Most of it, the stuff in the chili is organic. Pretty cool. So this is a perfect example of something that's not valid. Too much weight on the opposing side. It's not nice clothes. It's not valid. Opposing bar. Not a nice wick. Bar close. Video, but scrolling to find an example, basically. Yep. Nothing. Nothing. Yeah. Okay, well, you might have something there. Oh! Nah, probably not. Right, if you don't have an example on here, I'm gone. Just with 4-hour AMD clarified V2 and how the 4-hour clarified criteria V2 even came about to be called clarified criteria V2. Can't even say it. Like, and because of the stages that this method has went through, right? Like it's went through quite a bit, to be honest, with changes and evolving. And what I'm also proud of saying is that it's not went through any stupid curve fitting things. It's actually went through the complete opposite and logical refinements, such as the 1-to-1.5 and yeah. But I tried to ramble on a little bit more, so possibly you could get a trade. You might actually have one here. So this, I promise, is the last one. I mean, you could just click off your cell anyway, if you really wanted to. Yeah, so there's nothing here, because which one was it? This. Yeah, beneath the EMAs, but this one is okay. EMAs are stacking, and you probably open below. You might even take a loss here, so yeah. EMAs are stacking, your playable range. I would say it's okay. This is fine. Yeah, you could actually take a loss here. So remember, you mark the lower hand, which is the bar you're rendering based on. Put your stop just a bit below. And then you're looking up to the left, basically. And, you know, I would just go instantly about there. To be fair. Even that would be alright. I think that's actually where it was, because I think it said 2.24. So yeah, you take your loss here. It's what it is, whatever. Good one to end on then, to show that I'm not cherry picking or whatever. So yeah,